Hello, everyone. How is everyone doing? Good afternoon, Patrick. How's the weather, Patrick? Good afternoon, Roll Palms. You found the moves confusing. Nice big intraday reversal. Good afternoon, Jacob. Hello, Options 22. Hello, people hiding in the background. So yeah, big intraday reversal after putting in a potential moderate topping pattern in the S&P. So we'll see about that to see whether we get some follow through to the downside. Remember, earnings season. We start to get some earnings kicking off tomorrow, but Friday's the big one. Good afternoon, Donald. We already covered the. I thought the reaction this morning was a little overblown to the upside. And anybody saying this is it for the Fed's hikes, I think they're. Unless the PCE, which is 2 weeks for it's just over 2 weeks from now, which is April 28th. Unless that comes in like really below expectations, that's the only way I see them doing a pause. That's the only way. I'm just going to put that out there now. We've got CPI out of the way. We've got non-farm payrolls, which held up very well. CPI, still core inflation at 5.6 year over year. That's not 3.5 year over year. This is still hot. So we had the EIA numbers coming out with crude again moving strongly to the upside with the FOMC minutes. Only interesting thing in there was that they're expecting mild recession towards the end of the year. All right. Good evening, Anissa. Hey, Daniel. Good day, Richard. Bro, today was wild. Well, you can say that. Yes, you did say that this morning. It was, sell it after the open. It held up a little stronger than I thought, and then it's time for if you think this is a capitulation, Coco, what, any down day is a capitulation? Oh boy, Coco. Should I ban this other account too? You'll just come back again, won't you? Coco is still alive, part due. Tomorrow, an hour before the open, PPI, now not as significant. Remember, last time it was in contraction. This time it's between flat and mild increase. Core PPI is still expected up 2 to 0.3, up 0.2 to 0.3. We have initial jobless claims. Again, it's forecast to be well above the 200K level. So we're going to keep an eye on that. Continuing jobless claims, again, coming in well above 1700, which was a really nice area before. And you see climbing up, and these are the revised. We were topping out in the 1700s and moving up to the 1800s. So that's where we sit. So 1 hour before the open is going to be pretty busy between a combo of things, and then it's dead the rest of the day. And do you see here, chips finally got a pullback. Tesla pulling back, Amazon pulling back, Microsoft, the only mega cap that was really up today. A slight rotation into some healthcare, but that was it. You see energy, healthcare, and industrials barely eking out gains. Consumer cyclical taking it in the shorts along with comm services and technology. Fed watch, still 71% for a hike or 60. Boy, what a nerd. When it doesn't agree, let me hit refresh. All right, 67% for the May hike, 65% for potential June. So between May or June, one more hike still. And then a non-cut in July. So fear and greed still solidly in greed mode, and Coco's looking for capitulation well in greed mode. Oh boy. Earnings. We got Delta. Not really expected to be market moving, but it will be interesting to see how the airlines are stacking up, kicking it off. Progressive, very minor. Infosys. you don't have any big players, but you know there are a couple interesting earnings and nothing after the close. And Friday's the real big day there. Hello, MP. Well, thank you for tuning in for the first time. Quasimodo, just wait till that bell rings tomorrow. Well, thank you for tuning in also. All right. So this spike up this morning was high enough to put us into potential double top territory. Where would that take us if it were to trigger? And again, we need a close below 4,096.50. And that would only theoretically take us back to the bottom of the weekly rotation zone if all the targets were hit. And look, we're just in front of the first target being hit, you have the prior breakout level. So, by the way, lower probability still because it's against the daily rotation zone. So lower probability, and it's a fair way off from triggering. So what am I watching for now? Well, at this point, well, not that one. We're flipping around our harmonics. And you see from the spike high today and from the low on last Thursday, we did close below 62.5. So I am watching for follow through at least to 4106 to 4096. So we're going to probably retest the 4100s easily. And we could do that without technically triggering it. The next target I'm utilizing is 4,077, 4,078 area, which is the bottom of the daily rotation zone. And we have a trend line running up to that area. So you see here, even if we pull back into the rotation zone on the daily, we still haven't even gotten back to the breakout level. We'd have to actually get back to this 440.50 area. And that's still, yes, that's more technical damage, but it's not severe technical damage. You start getting below the second target on the double, which is right in the proximity of the 50 exponential, right around 4,038, 4,039. We start getting some more significant technical damage. Why do I say that? We've broken a trend line. We have then closed into, especially on a closing basis, we've closed into the prior breakout area, and we could keep falling towards the 200. Where does that put us at the rotation zone again on the weekly? Right in this area, we really get the close below the final target, that 4,021. That's major technical damage at this point. That is major technical damage. So, Bear Better Than Beer says it's time to short the market. Well, I'm at least watching for some follow through. And then it can be rolled. I mean, if there's a nice little bounce setup that rolls over and then we get the close, it could be rolled down for into this double pattern. Quasimodo's going to take some coins soon. It's going to get ugly. You heard it here first from Quasimodo. All right. Now. Let's do the bigger harmonics. Look where the 200 simple is. Right around that 62.5. We get a close below that area. Bon voyage. That's the absolute critical level. So can stuff get positioned before that level on the short side? Yes. But if you're wanting to take out the October lows, you're going to be really watching this 39.66 area for a close below it. The net, to the upside for tonight. To the upside for tonight. The key breakdown area was 41.31. So that's a major resistance even heading into tomorrow morning. Any rally that cannot get above 41.31 on at least a 1 hour closing basis will be looking for a rollover play. And that's also with the 1 hour rotation zone. Okay? So that's the key area I'm watching. There. Are we done yet? NASDAQ, approaching the last little breakout zone and the bottom of the daily rotation zone. We start breaking down below 12,900. My next level is 12,741, 12,750, and then about 12,600. All right. After tapping off that 87.5, remember we got the close back on the 16th of March above the 87.5. We hit that, above the 62.5, we hit that 87.5, which was what we were watching for. Now we're potentially getting that rollover, but we close below the daily rotation zone. Look where that next target is at least reconnecting with the weekly rotation zone. Where does major technical damage start occurring on the NASDAQ? Well, let's see. If we start getting a close below 12,630, we start doing some pretty significant technical damage. The major area is until 11,560, but if you get that close below the 200 again, between the 50 and the 60, I'd really watch. And earlier than that, any close below about 12,350 is a big warning shot. I'm going to be watching for a potential, if we pull back some more, a potential bounce near to 50 and then another rollover and a retest of the 200. So I think there'll be multiple short areas. The Dow coming up to our harmonic projection, just spiking through it, and then bon voyage. Key levels I'm watching for the Dow now going into tomorrow is to the downside is about 33,626. Technical damage doesn't start happening till at least you get the first sign is about close below about 33,450, 33,450, and then more so about 33,300. Remember, I'm just jumping back to the S&P. Also remember, weekly cycles are at the top and could be starting a rollover. And we had daily cycles turning up and they might be turning back down. So this would be a very weak bounce. So we'd be getting a topping daily and weekly, which means we could get some more significant pressure to the downside. The Russell. Next is 1775, and then the major is about 1760. You break on a closing basis below 1760, watch out. That is not good for the Russell. And the Russell is still the first thing I'm looking to for sell-offs. Russell first, NASDAQ second, S&P third, Dow last. That's my order for sell-offs. The VIX, still no fear. No fear. Again, the 20 level is key. I should just put this line at 20 then. Why don't I have the line at 20? If the 20 level is key, somebody tell me why I don't have the line at the 20 level. And also tell me why I'm not typing it in and I'm clicking. There's the 20 level. Or it really needs to get below 1835 for rally mode. DAX looks like we're getting to a very toppy area, but until we get a close below about 15.6, it's not any major technical damage. The notes, was watching to see if it got the close above. We got the little breakout move, and then it's looking like it's going to close below yesterday's high, so it looks like we won't get a %B buy there. The 10-2s based off the future, still in consolidation. The 10-2s based off the actual, not the futures, trying to pop back into consolidation, but not a ton of movement there. Oh, and by the way, the 10-3 month, I'm keeping an eye on this now since it did pull into double bottom territory, potential double bottom territory. I'm going to keep an eye on that to see if we trigger another potential reversal signal. Just wanted to cover that as well. Dollar index, yes, we are clearly in potential double bottom territory. Again, closing right at that 87.5 and testing the harmonic level. This is the second test of it. So I'm watching. If this breaks the minor levels, and again, very minor levels are, I'd be watching for a push down to 166 to about 150. But I'm going to keep an eye if we do get some dollar strength coming back in. Crude was watch for that reconnect with the 200. Almost there. Almost there. But we're going to get a divergence up here. So even anywhere up to this 85 level, I'm watching 85. We have some more significance up here. You have that harmonic projection and some significance breakdowns area. So that's where I'd consider, that's more aggressively raising the stops, especially with a potential divergence setting up here. Other than that, it's in trail mode unless it's a short-term breakout. Gold has a little mini double top against the daily rotation zone, so it's a slightly lower probability. And if it triggers, we could get the pullback to 1943. The targets are 1970, 1957, and 1943. And where would that take us? Back into the weekly rotation zone and the prior weekly breakout area. So is this major technical damage? No, this is actually an orderly pullback back into the weekly rotation zone. So it would not be a panic move. Why gold have an inverse correlation with the NAS? It doesn't always have an inverse correlation with the NAS. Gold's more trading, I think, off of stagflation fears right now. I haven't looked up the exact correlation right now, but it doesn't always have an inverse correlation. Gold is just trading off the NAS stagflation fears that, hey, we'll get a recession and inflation will get stuck at a higher level. So that's what gold's trading off of that. Hey, Tashambi. Thanks for tuning in. So, what else do we have here? 10-year, Japanese 10 years not pushing up to 50 yet. So again, no trigger on this double bottom yet. That's what I'm keeping an eye on. Nothing there. Euro, this is technically still just barely double top territory. I'm expecting it to invalidate it, but we'll keep an eye on it. Could be off the table. Pound also, potential double top territory, but might never trigger as well. Bitcoin, pausing inside day so far. On a break of yesterday's high, 31,280. On a break of yesterday's low, I'm watching for a retest of 29,000. Tesla, little gap up, gap fill, and then it actually was a double gap fill. And moving lower to still have the massive potential weekly double top in play. And I'm watching for shorter term. Should the sell-off continue, close below what, or at least momentum below 177.75 with a follow-along close. There is still a gap left down here. By the way, 174.48. That on momentum move, especially over the next couple days lower, that would be a primary target. Where's this sit with the weekly? Also, look at where it's sitting right now, the weekly 200, that area. So if we break down here and trigger this massive potential double top, we could theoretically retest this 110 area. So we had something on Intel. Intel is, yes, it's into the daily rotation zone. So if you're looking for minor, again, I'm surprised it actually was this strong. I'm watching for a more substantial pullback in Intel at this point. But here are your minor harmonics. The next one is 31.79. We start breaking below that. Remember, this is you have you start getting below about this 3176 area, 3179. You are into a clear path move, and the next target's 3026. So depending on your positioning and what you're looking for, those are the key levels. The major technical damage would happen back on a close below about $30. I'd just go 30.30 is close. That would take us below the rotation zone, below the 200, and below the breakout level. So that's a major line in the sand for me. Yeah, thank you. Thank you for tuning in, Henry. Couldn't I explain what you mean by the rotation zone? The rotation zone is a concept where we look for market rotations. It is between the 8 exponential, EMA, exponential, 8 and the 21. So you see we got a pullback here into the rotation zone, rotation back up. Little intraday pullback in the rotation zone, rotation back up. We paused at the top of the rotation zone. Now we're closing into it, so I start watching for the bigger pullback into the rotation zone, but I am wary of potential rotations in this area, of rotations back up. And then you also look at the weekly, which is starting a separation. So the major support is coming back at that 30.30. Why? That's the 8 period on the weekly and the prior breakout zone. The other moving averages just that we follow are the 50 exponential, and why you get reactions of the daily and the weekly on it. Okay? You can see here how we got the weekly reaction. And remember, these are not areas that are, it's got to stop to the penny. No. See how we poked above it last week, closed back below it, now we're starting to pull back. So if we start getting below the daily rotation zone in Intel, below the daily rotation zone, we're targeting the weekly pullback. And if we get below that 30.30 area, it's not good. It's back into a major consolidation area. So there's your explanation. Hey, dark screen. You know what? Here you go. Bingo. It's crap. Still. Not to insult you. It's still crappy. At least you got a couple-day move up. But you're still praying for something in the bio-nanogenomics to happen. You're hoping for some kind of ignition play in there. But thank you for popping in to say hey. What else do we have? Apple. After hitting the harmonic, pulling back. Now this, Apple's at a critical juncture. Why is Apple at a critical juncture now? You can see here there's a little resistance ledge that broke above it, running up to our next harmonic. Stalling out at the harmonic. Then pulling back into the rotation zone. What do we have here though? It's still valid, little potential double bottom. So this is the only thing that would get me, again, short-term bullish. Is that for new recent highs? No. This could just take us, look, we have a gap left behind here too. Look at the nice big gap. Look at the targets on the potential double. Boom, right to the gap. So if Apple gets a close, at least on a 4-hour above 162.35, you've triggered a pattern. Potentially back to the gap fill, 164.61 area. The gap fill is to 164.64. Now, when you see, oh, is this a sure thing because we have multiple targets there? No, nothing's a sure thing. But it's got decent probabilities associated with it. Other than that, if we continue the pullback and it gets the break below the daily rotation zone and does not get the rotation up, and we do have that other pattern, but it has not triggered, I'm now watching for a pullback into the weekly rotation zone. The key area, my minor target would be to about 158. My more significant target would be about 156. you start getting a close back below 154, you're starting to do some significant technical damage, but the line in the sand's about 152 per Apple. Riot. Riot. George wants riot. Riot. Well, you start to get the market pullback. I'd be looking significantly, at least for a return to about 10 bucks. This is a very toppy area. You see here, let me just clean up my chart. You see here, it's coming up to a major breakdown area, broke down last April. It had a little basing move here. So you ran up. Is that, let me just see something. Yeah, it's really, it is. And it's the first target area. On that really extended double. But you see how the peak of this double area based here then broke up, it came up to the 200. What would I be doing personally if I was long Riot? I'd be more aggressively, if you're in from a breakout above this 993, I'd be raising stops. If you're looking for anything from the short side, it starts breaking down below today's low, you still have a gap fill and a return to the daily rotation zone between about 10.55 to 10 bucks. Why the contrast between gold and palladium? I didn't even look at palladium futures. And you can see how often I've looked at palladium futures. Why the disconnect? Because it's, my only thing would be it's not considered a inflation hedge right now. Now, from an industrial sense, it's still important, but you see stuff like, I mean, I'm waiting for something to happen in copper, because copper is still in low productions, but you know what? It just doesn't have, there's platinum. Platinum's not doing much either. So what's this telling me? It's not a core commodity play with the metals. It's more of, again, the stagflation play. By the way, I am watching for a major topping area before a gold breakout. All right. Let's the semiconductors, you still have a potential double top in play. Need the close below 246.43, which is also looks like it could take it below the 50. So we could, and my primary target on this is about 235, but that's what I'm keeping an eye on. So you should probably keep an eye on that if you're trading Intel, if you're trading Nvidia. Nvidia, why? Because it's also still very overextended and we have divergences and losing momentum. So I'm watching for at least a pullback to 250 in Nvidia now. And by the way, this is one for if you're going to try to trade this as a head and shoulders, shoulder, head, shoulder. This one I like with the flat neckline. Which takes us, remember I just said 250, just takes us potentially to 248.48. So there we go. Where does that take us in the bigger picture? Just into the weekly rotation zone. So I'd be considering this really, see how we are at the bottom of the rotation zone also here. So we start breaking down, because when's the last time we reconnected with the daily rotation zone? This actually pulled up the rotation zone. So this didn't technically, we have technically not reconnected with the rotation zone since the beginning of January. So this is a many week run with insane valuation. So I'm at least watching for that pullback to that 248.48 to 250 area. Hey, take it easy. Yeah, I'm watching for some more. I covered that earlier in the live stream. I went through all my technical levels. We start breaking down below this 12,900. I'm watching for that 12,700, and then we get the close below 12,700, watching for the bigger pullback. I'm keeping an eye first and foremost because we have a significant topping pattern in the S&P. So that's the one I'm keeping an eye on. But again, we got to finally a breakdown with the NASDAQ. We could be starting something more significant going into earnings season. Hey, Amit. I'm doing okay. I'm doing okay. Thank you for keeping up with the replays. Glad you could join this one. I just have to dial stuff back just a bit. Dial stuff back. It was getting a little too intensive with everything I do. So, all right. That's where we sit for now. I think we're going to call it a day. Remember, don't get caught off guard. 7:30 tomorrow kicks off your jobless claims and PPI numbers, and then the rest of the day gets pretty quiet. Friday, besides the big bank earnings, we got, besides the big bank earnings, JP Morgan, Citi, Wells Fargo, PNC, and our favorite BlackRock. We also have with Friday, don't forget, you have retail sales. And then we have Michigan consumer sentiment, the preliminary numbers, which have the inflation components. So tomorrow morning could be somewhat interesting, and then Friday could be real interesting between earnings and retail sales. So this week is nowhere near over. All right. Thank you very much, Amit. Thank you for those kind words. With that, I will see everyone tomorrow morning after the PPI numbers come out. Thank you for everybody new who tuned in. I hope you'll consider tuning in again. Really appreciate it, and I'll talk to everyone later. Bye for now.